Welcome back, everybody. We have a lot to go over. Left shoulder, head, right shoulder, neckline. As people have been saying for weeks, there's the crack. So if you could see the roll, it started here about 2-3 days ago. This was really on that Friday on the quad witching was the time to really look at putting these kinds of shorts on. I would be really clear about this. This is not where you short. I'm going to show you a couple things as to why. I'm not saying that you can't make money, but the easy money now has been made. You may have noticed the stagnation in the market when we started going sideways after they gapped down. The day to trade and go short was actually yesterday. I will get into this in greater detail on Saturday. If you watched last night's video, I gave exact levels on large cap names and on the indexes that you needed to watch today. And if you watched that video, you should have done very well. Please comment on that if that was too technical, but I thought that was really good the way we gave levels. And I'm kind of poking fun at myself here because I said nobody knows that this is going to be a head and shoulders. And here it is. And the bottom line is once it started rolling on Friday, it really didn't matter to me. And I want to be really clear about that. I'll explain why. Once we started rolling in this level on this Friday after Taiwan semi-news, we were short. We started shorting into this, and I'll walk through it later, probably on Saturday, actually, because I want to get to some levels that you need to watch tomorrow. There's a lot to go over here, especially with the VIX and the dollar. And excuse my voice, it's been a long day. But if you take a look at how you held in here, and that was quad witching, you just couldn't find any footing. Then you went solid. You had Wick City down here, and then you had the Fed, and you had Powell, who used an iPad for the first time, and I'm sure that didn't really inspire confidence, but that's not the reason we're down. Here's the bottom line. We had a decision to make. We've made that decision. That's it. So there's no way that you're looking at this now and you're not a net seller. I'm just going to say that one more time. There's no way as a trader you're looking at this and you're not a net seller. You now have a head and shoulders. You now have the higher low, higher low. Let's get our pointer. People like the pointer. And you can see that right here. Oops. Here, okay, you can see that. And now what are you getting? Well, now you're getting these lower lows. Now, where do they go? Where do we wind up on those? I'm not sure. This is what I think you should do. And I'm going to save you a lot of money here so you don't have to take a silly course. You clone those lines. And what you want to do is you want to drop them in on some point that looks like it could be it. We don't know yet that this point is going to be it, right? We don't know that. But we could assume that this little low right here could tie into there. And the reason you do it this way is this line has the most points. So when you find these channels and you look for these channels, you're looking for the most points. The most points is what you're looking for. And then you come off that, whether it's bottom or top, and then you clone the line and you go from there. It just saved you a lot of money. What you want to do is just kind of draw it out now and say, okay. And we don't know yet. Why don't we know? Because we're not really sure if that's the level. We're not really sure if it's possibly down here and it's these 2 points. We're not going to know until we know. So we have to understand that we're pretty much eyeballing it right now and taking a look at it. I'll give you another way to figure this out too, that will give you a longer term target to the downside here and one that is methodical that you can replicate and utilize over and over again, not just something where someone's going to give 2 correlations and say, look at this. That's not how you trade. Anyway, see this level right here, 43.24. I think that's a reasonable level, and to assume that that is the low end of this channel. Let's play devil's advocate and say that this turn is not really included in there. And let's say that it's these 2 lines back here and we just haven't tested it yet. Well, where does that put us? 42.8. So, okay, so we could just say in this range, we're looking at 4,300 to 4,320 as a target. That would be a fair assessment. Let's clean this off and let me show you another way to do this to come up with a short-term target. And you can see our line right in here and you can see how we broke. And so we want to use that as the neckline. Why are we using that? That's the close. Everything else is a wick. Wicks are what? Wicks are price rejection. Why do we want to use a rejection? You could even do yourself a favor if you wanted and go up here and say, well, we had the reversal here and we hit here more times, so we're going to use that. I'm trying to work lessons in while I go over what you're supposed to see tomorrow. Any comments on that? Let me know if it's too much. But I think it's very helpful to go over and apply this stuff immediately when we see it to real life examples. The more that we do it, the more ingratiated it gets in our minds. I hope that makes sense. Left shoulder, head, right shoulder. I'm sure I will get a lot of comments from the head and shoulder gang. And now what we do is we measure that off. Okay, so now you're going to get 254 points down from the top of the head to the neckline is what you measure. You do not count the points, you count the percentage. Why? If you count 254 from the neckline, you're going to get a greater percentage, right? Because you're at 44.28 versus 46, wherever, 46.30 would be up there. Are we that high? Wow, we really were that high, weren't we? So what you want to do is take that 542 and just come off of it. And we're just dropping that down here. We're going to say 5.4, that's close enough. Okay, and then what you're doing is you're just dropping that level and saying, okay, 4,200. Now you come across here and go, that's not unrealistic. It's not unrealistic that you come down here. Is that the end of the world? No. No, it's not. A matter of fact, if you just kind of count that off, that's about a 10% correction. Before you had our friend, the Fed, that would intervene every 18 months, roughly every 18 months, we would have a 10% correction in the market for no reason. When you don't have the Fed and you have real mortgage rates and you have real margin rates that are out there, you get real volatility. As a trader, you love this if you know what you're doing. You absolutely love this. If you're not a trader and you were just comfortable back here, and you thought that this is what the stock market was going to do because the Fed's just going to buy everything, this was not the stock market. If you're looking at your returns from here and assuming that that's going to happen, it's never going to happen. This was completely manipulated by the Fed, period. It's just a fact, guys. I'm not knocking it. It was a lot of fun. It was very easy to make money, but it was. And we're not going to go back to that unless we get into a really sticky situation. And even then, I don't think that they're going to be able to do it. I don't think they're going to have the same power to do it this time around because they're still not unwinding the first little nightmare. So this is where we're at, and this is what's going on. These are the levels that I would look at. I want to get into this very specifically. Now, one of the statements I made earlier was, this is not where you want to short. Well, why would you say that considering how ugly that looks? Whether you want to use this or not, I'm going to be really candid about it. It's the equivalent of you saying you don't believe in gravity. Okay, I think everybody should use whatever tools that they want to use. But what I'm about to show you can save you a lot of pain from putting shorts on at the wrong place and how to put them on at the right place. And why what we did in the community today was just short really in the open, find little pockets later in the day and stay out of the way. And what that did was create opportunity for us. And really all we did was like 4 or 5 shorts off the open. They all worked. I mean, and it's kind of rare to say that, quite frankly. Usually I have a couple things that don't work, but there was just so much negativity. Why am I marking this off? Because you're at a 10 reading on the RSI. I did a video on this a long time ago. I probably should do an updated one. What I would do is just mark when you're at these levels and say, well, there's an hourly, and just go through them and just mark them off and see what happens in here, okay? Does this look like the spot? Let me just show you that again. Does this look like the spot on an hourly chart that you want to go out there and short? Probably not. Now, do you know where you should short? Okay, this is really simple. I do have a proprietary setting on this. The regular setting works fairly well. I mean, it works very close to what I have here. I'm just picky. See, I'm overbought here. Do you think that's a better spot to short than here? So you're overbought here. I think that's a better spot to short. I'll say it again. Is that a better spot? Is this a better spot, right? You see all these highs? This is where you put your shorts on, right? Especially in this kind of market. So what you want to do as a trader is this. I'm going to walk you through it step by step so that you get it. What you want to do as a trader, you want to short into this. When everybody else is thinking that it's over and we're definitely going to come back, you're going to want to short into this head and shoulders neckline. That's where you're going to want to go. And if you're saying, well, we're not going to bounce there, maybe we don't. But I can guarantee you, if you start trying to short into this, you're going to have little nightmares. And what do I mean by little nightmares? Well, let's go through the Nasdaq, and then I'll explain what I mean by little nightmares. I'm going to show you this on the hourly first. There's a couple things that I'm going to point out here that I really think you should pay attention to that will save you a tremendous amount of money tomorrow. See this level on the RSI? This is one of the lowest readings on the RSI that you have, period. Now, that does not mean that that's good and we're definitely going to bounce. What that means is that you probably don't want to be shorting when you have the most oversold condition that you've had since, I don't know, we'd have to keep going. Let's keep going and find it. Maybe March, we'd have something. You'd have to go back to March to find something that was lower than this. And again, I want to point out, this is an hourly chart. So from here, and then we bounced up, but it didn't get better. I'm not saying it's getting better because we're oversold. I'm saying that this is not an optimal place to put shorts on. And you'll notice that today, that should be abundantly clear. So now we know where we're at. We know why we're doing what we're doing and why I'm saying what I'm saying. And there's some things here that don't look good at all. And I'll be real clear about that. So number one, you have this, what I call kill zones. You have a neckline up here, and for everybody up there, look, I just want everyone to know there's a head and shoulders here, and you might crack. So I'll make myself laugh. We don't know if this is a head and shoulders, but it sure looks like it's going to be a head and shoulders, doesn't it? But it's there. We could all see it. So now what do? Now you come through and you look at this line, and I want to show you this neckline. I'm going to drill into a 4-hour. Remember where you are right here. And we're going to come back to this, and then I want to drill into some of these names and show you some of the issues that I'm sure that you guys all face today, and then what you can do about those issues tomorrow so that you can be profitable, or at least give you a skill set so you can make a better decision tomorrow. Why I point out the names you should be looking at. I'm trying to interweave it all together, guys. So if it's too much, let me know. Click below. And I do appreciate the sharing. I really do. And it does show me when people share these. So I do greatly appreciate it. See how you're holding that level? See how the 4-hour broke right here? See where you're oversold on a 4-hour chart? Okay, you're going to want to just kind of watch that level very, very closely and see how they do. And just watch and see where this goes. Let's draw this straight across and we'll drop this down. Okay, how many times have you been this oversold? Once here, okay? Did we bounce? We did. Let's drill down into this. Here, did we bounce? We did. Again, this was a Tuesday in August on the 22nd. We bounced and then boom, Armageddon. So all I'm saying is that you can bounce maybe to the 50 before you roll back down again. I'm not calling a bottom. I want to be really clear about this because there seems to be some conjecture here when I say things. You have to look at the time frame I'm discussing, how I'm tying it all together to multiple time frames, and you have to look at it from this perspective. There's waves in the market, right? Just like I said, NVIDIA is going to be greater than Apple. I still make that statement. I still stand behind it. We'll talk about it in 3 years. But in these waves, you're going to have this if you look at it over the long term or something like that. And it's up to you as a trader to figure out what your time frame is, right? That's all you can do. I know my time frames. So let's drill into this, understand where we are, and based upon all the analysis that we've done, we know one thing. If we know one thing, we know that this is not an optimal spot to do what? To put on new shorts. So when we're putting on new shorts today, we're literally playing, and we're playing musical chairs. It doesn't mean you don't execute. It means you understand where you are and you take what you can get and you get out of the way. That's what worked today. Anything else did not work today. You will note that you saw bounces. We're going to go through a couple of those names. We're going to stick with the large caps. Someone's going to explain to me in the comments what a Shark Ninja is and why it is a great hedge against technology. But let's just keep rocking and rolling. So you see this 60-minute, and I showed you this trend line. Look at this today. This is how you know that you're right when you draw a trend line. Look at how we battled that area of that trend line all day. And then look at how we hit and rejected. As soon as we hit in here and started rejecting, this let me know that I could put more shorts on later in the day. And actually, that's what we did after we put a bunch of these on. And I'll show you a couple, but some glaring things here we have to talk about. So number one, let's get into some facts here. And here is the dollar. I'm going to click off of the RSI for a moment. We're still in this trading range, and we're having a hard time here. We're not able to get through. Don't have an answer why we didn't push today. Of all the days to push, this was a great day too, and we did not push. The VIX, I said 20 in about a week. It looks like tomorrow we might get there. So you're going to want to watch this, but this is very telling. People are rushing into it. And we do have this quote, government shutdown. Personally, I think they get it together, but there I go thinking again. You never know what happens there. I want to see if they close below 15 or not. And then you're going to kind of go from here and see what's going to happen. I personally, once again, think you're setting up to get into the 20s. And I do think that you could see something like this, 25, 28 before this is over. I do think you can see something like that here. You still have people out there that aren't getting what's happening based upon the dot plot. We went over it last night. And for those that remember, there's always the stool. And we'll have the 3 levels of the stool, or the 3 legs of the stool, the macro, the fundamental, and the technical. So you always want to be watching all 3 of these. Okay, this is how we actually profited the other day. Was fundamental analysis. Understanding the macro helped us greatly with the Fed yesterday, and we did quite well off the Fed when he was done by understanding the dot plot. That was macro. Fundamental analysis today helped us greatly understand why we should buy AVGO when people were selling it. The technicals are telling you what you should be doing right now in regards to the indexes. You need all 3, guys. Anyone that tells you that you don't, they're the ones that stand out. You have to develop the skill sets. It takes time. It's not easy. Then you have to figure out how much time you want to put into it. But let's talk about AVGO. So the rumor comes out yesterday. You have to love these rumors and when they start, that they're switching their chips. I think it's Google. Google's done, or Microsoft's done switching their chips out. I forget which one it was. It doesn't really matter. They were switching it out, and then Marvel was going to take over. You saw something really interesting this morning, and I pointed it out in the room. I even discussed it on the pre-market live that's public. I always watch one thing, and I would strongly suggest that you watch it as well. Let's mark it off. Always watch that 7 o'clock bar. Always. And I usually drill into the first minute, and I want to watch that 7 o'clock bar, and I want to see how we act there. And then when we flip over it, you know where you're at for the rest of the day. And you know where your demarcation line. Why? Because you have people there at 7 o'clock in the morning that's their only access. Some people only have access to the markets at 7 a.m. pre-market. Other people have access a lot earlier. If you're trying to get access earlier, I have no affiliation with them, but Interactive Brokers, you can pretty much do whatever you want, whenever you want, candidly. So you see that level right there? Well, we're starting to flip and we're starting to go higher. At the same time, you're watching MRVL do the same exact thing. Here's your big bar up at 5 o'clock, and then what happens at 7? Right in here. Well, you peak, and then you're done for the rest of the day. You never even came close. And then that was it, and then you sold down. So really what this was just, in my opinion, the mother of all setups. They got out of MRVL, sold it to retail, who thought that it would be a good idea to buy this. You can see the reversal, and you can see how you are pretty much setting up to break and fill that 49 level now. This was definitely one you should watch tomorrow. There's no way. You have the people I call the hopes. They're hoping overnight that something miraculously happens with their long, and we all know what hoping gets you. So I think you see 49.5 tomorrow. I think that's a pretty easy way to look at it. You also, when you say macro, fundamental, technical, you have to understand that these bars are all human behavior. So if you can start thinking about the human that actually decided not to close his position overnight, and now it's at the low of the day, and I've been there when I started trading. I'm sure you've been there if you're listening to this when you started trading, that you've held something because it's surely going to bounce. And of course, it doesn't bounce. So I would watch that tomorrow. I'd be real careful with that one and see how it acts. The AVGO, and then they issued a statement in the middle of the day. What's great about these statements is they issue them right after everybody's always in, right? So let's get rid of that. So you can see right off the open already what's happening. You have a buyer. Look at the opening price. Always mark the opening price if you're going to day trade a stock. And then you just watch the opening price. Comes right back down. Flim flam. Let's get everybody in. Then we're going to take it to what? The top of the control bar. Takes it to the top of the control bar. Okay, we've hunted the stops here. We've gotten these guys out, right? We've got the longs out. We've got the shorts out now. We take it back down. All right, release the press release. And they come with the press release going, oh, well, yeah, we're buying chips from them. I don't know where that's coming from. And then boom, stock runs up. This gave us a great entry into this. It's a really simple kind of trade, but it gave us a real strong entry into it. It was kind of hard to make it a formal alert, but I put out there that I was doing it, so people did it with me. Trades up, starts to break down, and then that was it. I just blew it out, made $7, $9. I'd have to look at it, but did quite well with it, frankly. I was pulling money out, and it was that kind of day. Microsoft, I did both sides of this. When you broke here in the morning, you just shorted it, came in, and then went from there. That was a great trading stock today. And then they hit news, and people started to read the news, and then it started to sell down. But I was in and out of this a lot today, candidly, more so than I usually am in one individual name. And I like this trade a lot. I mean, I really do. I thought this was a great trade for us. And that was it. I mean, I'm going to tell you now, I would stick with the large cap trades, because that's really where the action is, and that's what you're saying. But if you're looking at Microsoft right now and you're taking a look at this doji, I'm going to clean up all my levels. See the doji here? You have no idea what that's going to do. If you want my opinion, and I'm going to give it, is if you can't get above the previous day close of this bar. See how solid this bar is right here? Okay, this is called the Marbuzu Black. 60% of the time when this closes here, we said this last night, you can go listen to the timestamp. We go lower. It's exactly what happened. Okay, this time it didn't go lower, right? It's not perfect. So if you think about that and now where you're at, dojis are uncertainty. I think you're going to see a lot of these dojis where they go sideways, where we're not, and then they're going to work their way down. Once that oversold that I pointed out is done, then you go to something like NVDA, and these are the levels I gave last night, and I still think it's possible, and I still like it long term, and I'm going to hold it long term. But in the trading accounts that I do, I would not be holding this long term. As a matter of fact, we did a trade at the end of the day after we did one earlier in the day where we just pulled more money out of it. And it was a really simple trade. I'll show you it. See this level? This was here, I'll show you this through the positive divergence so that you can see this stuff. So you see this positive divergence right here, down here, and here. I got that in the way. I don't have time to take it off, but see how you have positive divergence? You have a higher high on the RSI and you're here. Okay, so that let us know to get out of the short, cover the short, and we did quite well with it off the open. Simple trade, broke the VWAP, and then boom. And we extended the time frames today, guys. You might want to do that too. Instead of trading off the 1, start thinking about trading off the 5. It's giving better entries right now. Sometimes it doesn't. Right now it does because of the amount of shenanigans that are going on out there. So you just mark what? The open, and then we have the VWAP in here. But this was a pretty easy read, and I'll just show you how to do it. So all you're really doing is just marking that point, and then you're just coming across on the angle. You're marking off that angle, right? And you can see it. And what this does is it presents a kill zone, and it has to make a decision. I'll show you the same exact pattern on XLRE here in a moment. See how you are in here, and let's get rid of the VWAP so that you can see this clearly, and we don't need the 9 for this explanation. I didn't even use that. You can see how you're wedged in here, right? I'll take the open out so that you can see it. And once you wedged in and this made a decision, that's it. Decision's on. And you know what time it is. It's the last hour. So you know that that's when institutions move. Remember that? Institutions move from 2:30 on. Cracks. So this gave us an entry, short, stock, down. And then you're trimming on the way out. And then when it starts rallying, you're just covering or getting stopped out. I closed the stock a little early. I left the puts on. The puts did considerably better than the stock. And to me, this just looks god awful. The only thing that's really, that I really wish that I did was start leaving some on because of what happened yesterday and today. It's really hard to look at this on any kind of hourly basis and say, I want to stay short this when the RSI is here, because I know I'm just a day or two away from dealing with something like this where I get back to that 50 level and then work it off. It's just inevitable that that's going to happen. Like if you're shorting in here for a longer term time frame and you're down at this level, it's not going to work. Very rarely is that going to work. You're going to have to be super, super quick. And my advice is that you just work off of different time frames. For example, it was easy to work off this time frame here because I got back over the 50. And you can see your level right here. I'm spending a little too much time on the RSI stuff, but this is kind of important to watch tomorrow. So you can see right here, right? I'm over the 50, tries to get over the 50. It can't. What's it do? It rejects. So this is perfect with this. Give you an opportunity that you can pull some money out of the market, and that's what we did. So I do like this again for a short, and I am carrying a short overnight through other vehicles, NVDA, and some other positions I have. But today, the additions, no, I would not be, even though that looks god awful, and I think I'm going to regret closing those puts, I have to stick with my process. It's what got me to the dance. So it's just the way that I trade. Trade this little guy today. You might want to take a look at this name. I'm not going to talk about the FDA and the validity of this. All I'm going to tell you is that cash on hand here is roughly $2.70. Okay, it's $2.70. We paid $3 for this thing today. We already took money out of it, and we can move the stop to break even. So at this point, it's just a free roll. Anything like this, when you start doing this, and any of these biotechs, if they ever have news and the news is god awful, the very first thing you should do is go look at cash on hand. If you look at cash on hand, you'll know that there's a level that somebody will be out there and saying it's trading at cash. I'll buy it at trading at cash, and that's what they do. So instead of getting a yield, they get a call option on whether or not this drug actually works, but they're paying cash for that opportunity. It's really not a bad spot to be if you think about it from that way. You start going through some of the other names. It's really hard to look at Apple and think that that's going to hold. I just don't see it. We have to get through tomorrow. We have to get through the options. We have to see where we're at. There's nothing redeeming about anything today in any of these charts. I just think that we're oversold, so we're due for some kind of bounce. That doesn't mean that you can go lower. But you can go lower. You just have to realize that at that stage in the trade, you're renting these. You don't want to be building these huge short positions here. At least I don't want to be doing that. I want to be, looking for maybe some of the other names that I would like to buy. But Apple's not up there as one of those names. I really like SPOT. We saw that reversal yesterday. My hope is that I get to that neckline. Maybe I hold in there and it gives me an opportunity. Tesla. Again, this was one of the 3 or 4 we did off the open, but your gap filling, is there more pain here? There really could be. If you start breaking that 50 that you haven't even broken yet, take a look at this on the hourly and see where we're at. And you can see how this is going. It's definitely something to look at and to pay attention to. And, I want to go through one thing that I see out there a lot. I see people talking about the tips market, and the Nasdaq has to go and match the tips market. As a matter of fact, somebody even sent me something, and I'm not out to just disagree with people just to disagree with people. But when you see this kind of stuff, you look at the tips and then you go look at the Qs, and this belief that these have to trade together, it just doesn't really work that way all the time. All right, you're going to have correlations, and some correlations are going to be there, some are not. You could make the argument that right now maybe these should be closer together, and they're not. Therefore, this has to drop down. But you've had correlations of this where this has not matched anywhere near close. And all these data and all these charts, you can just map off. You're going to say, well, it matched here, and then it dropped, and then we held here, and then we started to rally. And then based upon that, that drop is something we have to pay attention to. And so the argument I would give is just, first, it depends on your time frame. If you mark the peak right here, and you mark the low right here of the tips, and you just mark off that level where the tips went down, and from that point, this is where you started, and then all the Nasdaq did was just rip as the tips went down. And you're going to miss all that because you're not going to be in the trade because people aren't buying treasury bonds. Like, you have to think this stuff through. If you go and take a look at this on like a weekly chart, I was just looking at this in this particular section right here. And what I noticed, and I can just do it this way and then drill into it really quickly just to get this out. But I was looking at this going, okay, well, what happened here? Was this a special time when tips dropped and then the Nasdaq decided to rip? Should you not have bought the Nasdaq and this entire move of 113 points over 3 years because the tips was going down or going flat? Like, look, correlation, right? I'm just going to say it this way, and I can do more on Saturday if you want me to get into this. Correlation is not causation. And you have to understand there's a difference. You can find things that correlate for periods of time. And I'm not saying to not find things that correlate. You should be finding correlations. But to go back and look at old correlations and then say, well, it correlated last time, therefore, you could be in a completely different setup. You could have a completely different monetary policy this time. And maybe we're in one where this should correlate more to where it is now, right? Or maybe it's in one that should be less. But you need to understand that. And the best way I can explain it is just to tell you that correlation is not causation, and you need to keep it in mind. People say, well, what does that mean? I'll give you a great example of what I mean by that. So let's clear this off for a second and let's look at NVIDIA. And this is a great way to explain it. Please be aware of the levels that I gave today on these names. Please comment on this video and please share. There's a lot of information here that could help people tomorrow, and I greatly appreciate it. But if you look at NVIDIA, all I heard up here was that, oh, they're cooking the books. They're sending chips over here. They're hiding chips, and the investment banks are buying the chips and all this crazy stuff. And now the stock drops. And now those people are saying, see, I'm right. No, the stock dropped because demand may be weak and they might be cutting orders. There's rumors that Microsoft might be cutting orders. There might be validity to that, right? That might be why the stock's dropping. It might be dropping because the dot plot didn't change to where it was supposed to. Okay, that is a reason. What's not a reason and what is not correlated is thinking that the company is dropping because they, quote, did something that was gray. That is completely different. And that's the kind of stuff that you have to watch, right? It does matter that you just drop. You want to know why it's dropping. If you're just trading. You don't care if it's dropping because it always drops on a Thursday. But you want to be careful of matching these correlations and just assuming that that's a causation. Oh, that's the reason why it's doing this. And then all of a sudden it's something else. It's really important to understand that, especially if you're trying to develop that skill set that I'm always trying to hammer home with people, where you have to develop the stool. And thank you again for the stool. And I'm sure everybody wants to thank the person that gave me the stool so you don't have to see my drawing. But you want to understand the macro. You understand the fundamentals and the technicals. Even at a base level, you want to understand this, because this would save you a lot of time and a lot of heartache. It saved people that understood this a significant amount of money in October back here when we have this wick and we had peak inflation. And if you understood the macro here, then you were able to do a couple things. And I'll show you what I mean by that. If you looked at the macro that happened in here, we'll drill into this on the weekly very quickly so you can see what I'm talking about. If you looked at this on the weekly, let's do it this way, it'll be easier. Click off of this. And if you understood that you were here and you understood the macro issue and how you peaked on inflation, and then you understood technical analysis, and you overlay your technical skills and say, that's a positive divergence. And then you go back through time and you see if there was ever anything else very similar to this where you had a positive divergence that correlates. Now, is the causation of what happened here the fact that you have a negative divergence? No, the causation of the move is that CPI pick. The trigger on when to buy is this, right? Hopefully you follow that. That's it.